Welcome to the InterMarket Analysis update. This video is designed to be a supplemental video to the daily video updates, where on a weekly basis, I look at other markets that have an impact on the S&P 500 and just see how they're acting to try to give us some clues as to what might the S&P 500 do going forward from here based on what it's already done. This is being recorded Sunday, October 23rd, and this will apply to Monday's session on October 24th. So the first thing that we look at is a thing called valuation. This is the market considered to be cheap, fairly priced, or undervalued? With the decline in the PE ratio, and if you look really close, you can see where the PE 20 has been coming down, as has the blue dash line and the green dash line. That's because earnings have been coming down now that we're seeing more economic issues overall. But we were above the PE ratio of 20 for quite a while. We've fallen below that. Even though we had an up week this past week, we're still below the expensive level. Now, if you look forward from here, and I don't have a chart to back this up, this is just going on the last chart that I used. These charts right here look backwards. They're looking at the trailing 12 months. Another chart looks forward, and that's what the stock market uses. We're down around the blue area as far as looking forward, but we tend to always kind of be there anyway because the market likes to be more optimistic looking forward. Then down on the bottom, we just show the difference between the S&P 500 and the red line, where it's actually finally dropped below 20 and has stayed there for quite some time. If prices continue to fall, this will also fall. And if earnings continue to fall, this will also fall. The idea being that when we're down here in the green area, that's when a lot of folks that use fundamental analysis, that's when they want to buy stocks. If they're in the blue area, maybe they want to add to some stocks that they already have. And then when you get up to the red area and above, now stocks are considered to be expensive, and sometimes people will sell those stocks. Another look at this just goes back to 1980 and showing historically the things that have happened and where these different PE levels were at during those times. Then every week, I had been talking about a thing called the possible positive scenarios. We're going back and forth. If we have an up day, the scenarios are looking better. If we have a down day, the scenarios are not looking as good. So please watch the daily videos if you want to get updates on that. I'm not going to include those in the weekly videos that I do. First, let's look at growth and value, where we were up almost 2.5% on the week overall, but we're still in an overall downtrend with growth. This red line is the 200-day moving average. The blue line is the 50-period moving average. So these are declining, and we're below both of those moving averages. Value isn't doing all that much better, even though it was up about 2.5%. It's in an overall downtrend as well. But on a relative basis, growth has been underperforming, even though it saw a little bit of improvement, where value has been outperforming, even though it saw a little weakness. This takes a ratio between those two indexes. Looking at another way, where we look at some other indexes between growth and value, this shows where growth had really been taking a bit of a hit recently overall. And then here's an inverse of that same chart, just showing how value has been in an overall uptrend. This looks at some ETFs, which are pretty much showing us the same thing overall. The growth is underperforming and value is outperforming on a relative basis. And then one more chart that we look at just shows how growth has been underperforming value. Some other markets, we have the 30 biggest software companies. This is a daily chart showing that they, even though they had not a great week, they're kind of building a base here right now, but they continue to be in an overall downtrend. Looking at the monthly CRB index, this is what we look at for inflation. We're still in an overall uptrend, but we're coming back down to this 12-period moving average. And then we look at this indicator below, where when this is going up, that means inflation is increasing. When this is going down, that means that inflation is decreasing or deflation is increasing. Well, we're seeing a little bit of a turn up as commodities are doing a little bit better in some areas. Then the Baltic Dry Index. This is also another inflation gauge that we look at. And after really spiking back up, it's starting to show some recent weakness, and it's still in an overall downtrend. Here's the CRB index itself, where we had a recent death cross, and we're starting to go into a downtrend after having spent a lot of 2020, 2021, and 2022 in a pretty solid uptrend. Corn is still, after spiking up and going back down, kind of still in the middle. Aluminum, after spiking up, it's really started to decline. Heating oil, this is what folks are going to have to need when we start getting a lot colder. That still remains pretty high. Gas, this is what the politicians are really trying to work with now, because this is the most in-your-face thing that we have to deal with, where it really spiked up. Then they released some of the oil reserves, the emergency oil reserve. That helped to bring prices down. Then you had some news coming out of Saudi Arabia that they're decreasing their output. That started to spike prices back up a little bit, and they're fighting like crazy. The people that are in power right now, the incumbents, they really want gas prices to go down so that they can claim credit for that and that you will reelect them. Where the other side is saying, no, 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 this is only going to last temporarily. Elect me, and if you put me in there, I'll do a better job at getting gas prices to come down. All right. Natural gas, after really spiking up, has also been coming down. Oil is right around 85. Currently, it had been a lot higher, and it had been lower than where we're at. Wheat, after spiking up and coming down, started to go back up, but is seeing some recent weakness. And then here's fertilizer. Even though it's been coming down lately, it's still really, really high. And this is inflationary because farmers need this to help their plants grow and all their food and everything that they grow. And if their fertilizer costs more, they're going to have to charge more for their products. And lumber, after being in a pretty solid downtrend, is now really starting to pick back up again. The dollar, which has been doing just really well compared to all the other currencies, it was down a little bit on Friday, but is still in an overall uptrend. And we're comparing this against the British pound, the euro, the Japanese yen, and a whole basket of other currencies. And people think, well, what's so special about the dollar? It's not that the dollar's so great. It's just, it's the least crappy currency out there compared to all the other currencies and all the other problems that are going on. There'll probably come a time when the dollar really starts to go down, down, down. But at least for right now, it's been holding up. When you look at the euro, how it's been declining as the dollar index has really been going up, it's a pretty favorable time to go to Europe if you want a good exchange rate. If you want heat, if you want to be able to eat any food, then maybe it's not really a good time to go. But at least you can get a good exchange rate. And then here's looking at the Japanese yen, how it's been declining again, as the euro has, as the dollar index has been going up. And then we're keeping an eye on the British pound after they were having a lot of political turmoil there. Their prime minister, who had been in office for 6 weeks, resigned. And now they're going to be picking a new prime minister, hopefully this coming week. Well, a lot of the things that the new prime minister wanted to do was freaking the markets out, including the British pound. And it really was starting to dive. And it's bouncing back up a little bit, but it's still in an overall downtrend. So we want to keep an eye on what's going on in the UK. Copper, even though we've been in a downtrend lately, it's been going sideways overall. We look at the copper to gold ratio that shows that copper has been outperforming gold. Gold, which should have been at the moon by now, is going the opposite direction these days, where here's a longer term look at that chart, the gold copper ratio. It's been just kind of going sideways as the 2-year yield has really been going up. And that is producing some real issues because these tend to move in the same direction and they tend to not get very far apart from each other, even though they're on different scales. Here's gold. Even though it was up on Friday, it's still in a pretty strong downtrend. Silver also was up, but still in a downtrend. Looking at some other indexes, here's the CRB, our inflation gauge against the S&P. Well, we're seeing some weakness in the CRB, but it's still outperforming the S&P 500. We'll have to see if that continues. Here's the inverse of that, showing how the S&P has been underperforming the CRB index. The NASDAQ 100, which is growth against the rest of the S&P 500, still shows that the NASDAQ 100 has been underperforming the S&P 500, although we are seeing some slight improvement, but no change in trend. Some of the other stocks, here's the big stocks, mainly tech companies. They still are in an overall downtrend, even though they're showing some improvement. The S&P 100 is starting to show some improvement when compared to the rest of the S&P 500, but still in a downtrend. Small caps, which had been giving some support to the market going higher, well, over the last few days, they've really been underperforming, but they're still in an overall uptrend. Low volatility stocks. These are stocks that folks get into when we're having difficult times. They're in a downtrend as well, even though they've shown some recent improvement. When you compare the low volatility stocks to the S&P 500, they're still in an overall uptrend, although they have shown some recent weakness. When you take the Dow, the transports, and the utilities and put them together, still in an overall downtrend, going kind of sideways, but also showing some improvement. Here's Dow theory on the daily chart, where we're starting to possibly look like we could break out with the Dow, but we're not seeing that with the transports. This is more of a short-term negative divergence. And then utilities, which had been holding up, just went through the floor. And even though they're bouncing up a little bit, they're still a little bit more negative when compared to the other two indexes. Now, some people don't use utilities as part of Dow theory. I do. I just want to see all three of these together. FANG stocks, the Facebook, Amazon, Apple, Netflix, and they're getting other stocks included. They're going to have to change the name here at some point. It was up overall on Friday, but still in an overall downtrend. And here's ARK, which has really been in a solid downtrend, trying to show some improvement, seeing if it can possibly bounce off some of this support from before. Bonds, which have been in a really solid downtrend, even though they saw a good day on Friday. World bonds are actually breaking below the COVID low based on price. And here's a monthly look at stocks. Even though stocks have been suffering, well, they've been just shining when you compare it to bonds. That's why you're seeing this ratio really going up. And then bonds, looking at the shorter term maturities compared to stocks, they're showing some recent weakness, but they still are in an overall uptrend. The blue line is still above the red line, but that could change in the very near future. The stock to bond correlation, where they had been going more or less in the same direction, now it looks like they're tending to go in the opposite direction. The 10-year yield, which really spiked up to well over almost about 4.25%, it's back down at 4.213, but so it's off of the high, but it's really breaking out when you look back of where it's been previously. The corporate bond index still continues to show more weakness. The 10-year yield is just really starting to spike up, and the 30-year yield is also spiking up. There's the S&P 500 to the 10-year treasury. That just shows that the S&P has really been underperforming the rise in interest rates. And junk bonds, which tend to follow the stock market, are in an overall downtrend, but showing some little bit of improvement recently. And if you think junk bonds have really suffered, treasury bonds have suffered even more. And that's why we're seeing this real spike up right now. Then here's the yields. Even though we're going up overall with the 2-year, that's where you get the best yield right now. They came down on Friday, but they're still in an overall uptrend, and lines are crossing each other. We've got some inverted yield curves, and things are just kind of all crazy right now. And then I wanted to bring this up because this is the one holdout with the main yield curves that I look at. It's the 10-year to the 3-month. We didn't go inverted, except we did for one day this past week. But we were only there for one day, and now we've bounced back up, and we're no longer inverted. We'll want to keep an eye on that and see if it goes inverted again in the upcoming week. Then we're looking at the international, where they're having a lot of trouble in the UK. They really had to, their gilt, which is what they call their bonds, their 10-year bonds over there. And that really shot up with their interest rate because their bond prices were tanking. And they actually got above the US. So you've got the US and the UK that are giving the highest yield right now, followed by Germany, which is also going up, and then Japan, which has its own little mess that it's dealing with that could blow up at some point in the future. They're trying to keep things more neutral as far as interest rates are concerned. Looking at some sectors, this is giving some hope to the market, where we're seeing the S&P 500 start to outperform utilities. And if you look at this chart, sometimes when this hit a bottom and started going up, that gave some support to the S&P to go higher. Also, when we spike up and start to go down, that often mark a top in the S&P. The staples sector is still in an overall downtrend. And then energy, which is just the number one sector, even though it saw some weakness recently, it's picked a lot of that back up and is still just going higher and higher right now in an uptrend, especially when you compare it to the S&P 500. The tech sector showing some improvement, but is still in a downtrend. Semiconductors, some improvement, but in a downtrend. Tech against the SPY, that just shows that tech, even though we're seeing a little improvement lately, we continue to be in a downtrend overall. Then looking at growth against bonds. So growth has really suffered in 2022, but lately, man, it's really outperformed bonds. Bonds have just been getting hammered. And then the 10-year yield has been rising a lot faster than the technology sector. That's why you see this chart going up. And the technology sector has been going down faster than interest rates have been going up. So that's why this chart is declining. Discretionary against staples, it's showing a little improvement, but still in an overall downtrend. And I see where I've chopped off the words over here. And then the inverse of that, staples continue to be in an uptrend when compared to discretionary, but showing some recent weakness. And then the energy sector, which has been doing really good, against the tech sector, which has been doing really bad. That's why this chart is really in a solid uptrend. Then gold, which has really been suffering, and the S&P, which has been suffering. Well, even gold is starting to underperform the S&P. And gold has really been underperforming the US dollar. Then high leverage loans. These are the riskier loans. They continue to be in an overall downtrend, but could be starting to show some improvement. Then our intermarket analysis, just showing that oil is number one going back to the beginning of the year, followed by the dollar. And then gold, stocks, and bonds continue in downtrends. This looks at the American Stock Exchange, the NASDAQ, and the New York Stock Exchange, takes a 5-period moving average of the highs minus the lows. When we're above zero, we're more positive. When we're below zero, that's more negative. But when we give an extreme negative reading, that sometimes gives some support to the market. We're seeing if that's going to happen. And it is showing some improvement, but we need to see follow-through improvement with this chart. Small caps, which are just slightly above their pivot, but still in an overall downtrend. Mid caps also a little bit above the pivot in a downtrend and holding up better. The Dow is up to its 50-period simple moving average. Is that going to act as overhead resistance? Or are we going to be able to break through this moving average and possibly get above R1? Or are we going to turn and start to go back down? NASDAQ, which pretty much has been floating sideways, we need to see more action out of this if the stock market is really going to improve. The same thing is true with the NASDAQ 100. Wilshire, more of a broad-based index. Can it get back above this pivot level, even though it's still in an overall downtrend? All stocks looking within the U.S. and outside the U.S., still in a downtrend, but showing some improvement. Emerging markets, still in a pretty solid downtrend overall. We might be getting a little bit of a bounce here, but we're going to need to see a lot more than this for the picture to turn more positive. Looking internationally, China's in a downtrend where the emerging markets, Europe, Japan, and even the US are trying to turn up according to this indicator, which is the KST. Bitcoin's just been floundering right around 20,000, 19,000. Sometimes it goes a little above, sometimes a little below, but it's just been pretty much chopping sideways all summer and into the fall. Looking at the S&P 500 against the dollar, they're still having a tendency to go in opposite direction. So if the dollar index is up, that's likely that the S&P 500 is down and vice versa. where oil and the S&P, they were going in the same direction. Now they're starting to go in opposite directions. The S&P to the 10-year yield, after going in opposite directions, really shot up. Friday was a strange day for the market. Please watch some of the other videos, especially the daily video, and I explain more of what happened in Friday's session. And then the tech sector to the 10-year, where they've been going in opposite directions, they really shot up and are going in more the same direction after Friday's session. The S&P to the 2-year yield, we're also seeing that starting to go in the same direction. So nothing has really changed since the last video. The things that were positive continue to be positive. The dollar index, energy, and interest rates, those are the things going up. And it's a pretty thin market right now. Or if you look at the negative things, yeah, we have our big old long list here that is pretty much not changed for a long time now. Can we get back to the point where things do change? There are some things that we're looking at that suggest the market could go higher from here, but we look at our charts and it could also suggest that we're going lower from here. So thank you. Have a wonderful week. Please feel free to check out the other videos. I also posted the weekly video, and have a great week, and I'll prepare this again next weekend.